JP Morgan just put out a report. Until the Fed stops threatening to raise rates, gold will be under pressure. Warsh is going to raise rates. Then shouldn't I be bullish on gold? And the answer is yes, I should be. China's speculators aren't buying. The long-term speculator, as looking at the COMEX, is too fragile to get involved with. You can't really rely on it for metal anymore. I mean, people pull their metal off the market too quickly. The LBMA is an even weaker link. I have a feeling that it's going to be another 3 months of roughness. If I'm wrong about Warsh and he does raise rates, then gold's going to crap out.
Focus is going to be on, bringing him back into court a lot. That could harm the economy, slow growth down. And of course, they would love to see that.
That environment's very positive for gold. And I'm not alone in this. Michael Hartnett at Bank of America thinks the same thing. I can't believe I'm saying this. The Democrats will cut back on some of the spending that Trump is doing, the CapEx spending, right? Which earmarks us for a recession. That would be bearish for rates and bullish for gold, straight up. Warsh would not be in control anymore. Warsh would have to cut rates because if all that CapEx spending dies, the AI bubble collapses almost immediately. How will the market react to his lack of information? I don't know, but it will probably be very painful. So they'll probably drive it a little bit lower, but it's near all-time high. So who cares? I don't know, but I have a better answer for gold, an easier answer for gold. The answer for gold is very gold specific, though. Everything that we just said as a backdrop for gold, if I don't think that Warsh is going to raise rates, then shouldn't I be bullish on gold? And the answer is yes, I should be. But I'm not seeing gold act the way it should, even though no one's in the market and all the weak hands are out. China's speculators aren't buying. And if China's speculators aren't buying, then no one is buying strength. No one is chasing it. They're buying the dip. China's buying more gold than they have since 2024 on a monthly basis. Their coin and bar demand for individuals is as high as our ETF demand was. So there's plenty of money going into gold over in China. It's just not chasing it. So take them off the table as the marginal speculator. These guys are investing right now. And I look at the U.S. and I look at the COMEX, and part of me says that the COMEX is broken because as a pricing mechanism, it really kind of dropped the ball, especially on silver over the last 2 years, especially the last 8 months.
Gold is trading above $4,045. Silver is holding near $57.77. Yet market analyst Vince Lanci says investors may be missing the bigger picture. Despite strong central bank buying, China's continued demand for physical gold, and ongoing geopolitical and economic uncertainty, gold hasn't made the breakout many expected. Lanci believes short-term volatility is being driven by Federal Reserve policy, not weakening fundamentals. In this video, we'll explain why he believes patience, not panic, is the key for gold and silver investors and what could trigger the next major move. Let's dive in.
And as a result of that, I kind of view the long-term speculator as looking at the COMEX as too fragile to get involved with, because you can't really rely on it for metal anymore. I mean, people pull their metal off the market too quickly. The LBMA is an even weaker link, and the LBMA and the COMEX definitely ride side by side together. So my answer is, even though I don't believe Warsh will raise rates, I'm not extremely friendly to gold between now and October. And the reason for that is between now and October is usually a seasonally bearish time. It will rally between now and August, but between August and October, it will sell off. Historically, that's what happens. There's a buy season and a sell season, and we're about a month away from sell season starting. So I have a feeling that it's going to be another 3 months of roughness for us before we turn a corner. So if I'm wrong about Warsh and he does raise rates, then gold's going to crap out, right? If I'm right about Warsh and he doesn't raise rates, hopefully I'll be wrong about gold. That's basically it.
So your timeline is interesting because it kind of puts it right before the midterms. And
it does.
And Trump has been getting, well, let's put it this way. The data is saying that the Democrats are going to sweep. They're going to do a lot of damage. So in that regard, a lot of his plans for, let's say, fiscal expansion, growth, et cetera, would probably get constricted. The focus is going to be on, bringing him back into court a lot. That could harm the economy, slow growth down. And of course, they would love to see that. Is that environment positive and good for gold?
That environment is very positive for gold. Okay, and I'm not alone in this. Michael Hartnett at Bank of America thinks the same thing. So I'll tell you first what I think, and then I'll tell you what Michael thinks, or I'll try and tell you what Michael thinks. President Trump's favorability rating, especially on inflation, has dropped again below what Biden's lowest was, and that's really bad, especially since there are all these other things going on, wars and deposing presidents and what have you. It's very unsettling. If I'm in the Trump camp, it's very unsettling to have his popularity be this low after all these positive things have come out on the stock market and the economy. And that's because we are in a K-shaped economy. Now, I think the MAGA types are disillusioned, as they were in Trump 1, and they're backing off a little bit. Now, if we go into the midterms, and it looks like the Democrats are going to take a big chunk out of the Republicans, then a lot of the spending, I can't believe I'm saying this, the Democrats will cut back on some of the spending that Trump is doing, the CapEx spending, right? which earmarks us for a recession. That would be bearish for rates and bullish for gold, straight up. Like Warsh would not be in control anymore. Warsh would have to cut rates because if all that CapEx spending dies, the AI bubble collapses almost immediately. And I believe that's the case. Now, Michael Hartnett said as recently as 2 weeks ago, he hasn't been a fan of gold lately. And you can tell he's not because he just doesn't talk about it. When he's bullish on it, he talks about it. When he's bearish on it, he just doesn't talk about it. But 2 weeks ago, he said along the same lines of what I just said. He said there are several things holding up this market. One is, there are several things that can take this market down. There were 4 of them. Let's see if I can remember any of them. The first one was if the AI CapEx gets cut off. If that gets cut off, that kills the market. The second one had to do with rates. If rates climb a little bit further on the long end. The third one I forget, but the fourth one was the midterms. If the Democrat, it's like he literally almost said what you said. If the Democrats look like they're going to sweep the midterms, then you have to look at this whole market getting crushed because of what they would do to the president's agenda. And if that were the case, then Warsh would have to cut rates and we would be in a bullish environment for gold. So I tend to lean very heavily on the bullish scenario for gold if the Democrats look like they're going to take a lot of seats.
According to Vince Lanci, the biggest obstacle for gold right now is uncertainty over Federal Reserve policy. Higher for longer rate expectations are keeping pressure on gold and silver, even as long-term fundamentals remain positive. He points to continued central bank purchases, China's steady accumulation of physical gold, rising global debt, and geopolitical uncertainty as reasons the long-term outlook remains strong. He also believes traditional exchanges like COMEX may not fully reflect what's happening in the physical gold market. Lanci expects some short-term volatility, especially during the seasonally weaker months, but he argues that temporary price weakness shouldn't distract investors from the bigger trend. His message is simple: stay patient, think long-term, and avoid making emotional decisions based on daily market moves. So, could today's uncertainty become tomorrow's opportunity?
This sounds almost cliched, but patience. JP Morgan just put out a report that basically said until the Fed stops threatening to raise rates, gold will be under pressure. So that goes for silver as well. So the word is patience, because I don't think that Warsh is going to be as hawkish as he's coming across as. And if we can just wait a little bit longer, we'll probably get an indication of that, perhaps as early as next week. So
That's good.
patience. I know that in their quiver, they have two arrows. One is a gold bond, and another is a gold revaluation. I also think that they are loath to use those two arrows unless they really, really have to. And so I'm scratching my head as well, saying, why would he bring? I'm in your camp here. Why would he bring this up seemingly unprovoked? Right? And so I'm throwing it back to you.
Something's
There's
going
something.
on.
There's something he said too that was fascinatingly inaccurate. You remember when he said that when they were showing the silver certificates, and he said, and these silver certificates, if you redeem them, we have the gold and silver there. And I'm like, no, you don't. That's not true. So we defaulted on those silver certificates. So for him to say that, and he's not ignorant of history, for him to say that it's an outright untruth.
Well, I think he's speaking to somebody specifically out there. Maybe it's a country. There's something. Some group he's directing this to. I'm just curious as to who and why.
Well, you tell me. Who do you think he'd be directing?
I don't have.
to?
At this point, I genuinely don't have any ideas.
I do have a friend, a Chinese national, who said that someday, he said this recently before Bessent talked. So it's a genuine statement. He said someday, I don't know when, but someday China is going to really release how much gold it really, really has, and it's going to ask the U.S. to disclose how much it has.
Wow.
So maybe he's talking to China. Maybe he's just trying to quell that. I don't know.
Maybe they threatened something behind the scenes.
Let's watch and see.
Yeah, this is a watch and see for sure.
But I think out of the 15 million reasons that Bessent could be doing that, I think China's got to be at the top of the list.
I couldn't agree more. Speaking of China, so you've brought this up a couple of times. They've been buying more gold recently than they have in years. Central banks around the world are pledging to buy more gold over the coming years than ever, and they've been doing this for now like 5 years or so. But, on the flip side, gold supply has been flat for like 15 years.
Right.
The U.S. is issuing, we talked about this, more debt paper than ever. More countries are shrinking their treasury purchases purposefully, or they need to support their own currencies and economies. It's a classic economics 101 setup with gold. I mean, you have increasing demand, flat supply. You have this treasury situation that's like a magnet pulling reserve money away from the treasuries and towards gold. Yet most people are solely focused on the most recent price movements since February. Right. What are your thoughts about this, and what would you tell investors?
Nothing. I would say between 2022 and 2025, you had the whole world realize that gold was no longer a sleepy, unusable pet rock. And so they started allocating larger percentages of their portfolio to it out of treasuries specifically. Now, we've reached a kind of homeostasis in that right now. So now people are looking at the dollar again because it was going up while bond yields were going down. Bond yields were going up. It was going up while the dollar was going up. It just didn't care about anything. It was just going. It just wanted to go up. They wanted the gold. They literally wanted the gold. Now, it seems to be captured once again by the dollar relationship. I would say this. If anybody is trying to figure out, is this different this time than it was last time? Look at the months between April and October of 2022. Now, I'll give you the scenario. In February of 2022, Russia invaded Ukraine. And when it did that, gold spiked almost to new all-time highs. And then right after that, Powell announced he was going to finally raise rates. And that started in April. And if you pull up a monthly chart between April and October, every month is down. Mm-hmm. And so for that 6-month, 9-month time period, they suspended the whole point of gold being more important than they can't suspend gold's real value forever, but they can do it for prolonged periods. So what happened in 2022, in my opinion, is happening again now. So they haven't actually hiked yet, but they're threatening to. So we are in a downdraft that I think will end in October.
Yeah.
So my advice to those people that you're mentioning is this is not different than what happened then. The governments and their policies can have pronounced effects on the market for extended periods of time, but no more than 9 months. But it's happening right now.
Yeah. All right. NVIDIA's market cap had lost an astonishing $1 trillion cumulatively in market cap at some point here recently total, yet was still worth 2.3 times more than the top 50 miners.
I saw
Help
that.
us make sense of this, and what do you expect to happen with this kind of relationship over the coming years?
I'm not the guy to talk to about miners, but I'll throw something out there. 6 months ago, I bought a miner. I mean, specifically for a 5-year investment. And I immediately took it on the chin and lost money. I'm going back in to buy now. So, but I am saying that miners are a buy relative to the NVIDIAs of the world over the next 5 years. Over the next 6 months, I don't care. I can't afford to care. I'm buying it with money I can afford to lose, and I'm buying it with money that I won't need for 5 years. So that's where I am on this. So my answer is a layman's answer. It doesn't make sense. It won't stay like this forever. I'm not using any leverage. I'm buying miners.
Vince Lanci's message is clear. Focus on long-term fundamentals, not short-term fear. While volatility may continue, he believes the forces supporting gold and silver haven't disappeared. If you enjoyed this update, subscribe, like the video, and turn on notifications for more analysis on gold, silver, and the global economy. What do you think? Is this just a temporary correction, or is a much bigger move coming for precious metals? Let us know in the comments, and thanks for watching.